Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on. Hope you had a good holiday.
Thank you for having me today.
Well, on Wall Street, the S&P 500 is inching closer to an all-time high, but not quite there yet. The Nasdaq, however, has logged a new high, boosted, of course, by tech shares. What was the story Monday in New York?
Yes, as you said, the overall market seems to be showing some mixed signals. But in any case, the Nasdaq has continued to show strong trend and breaking the record high numbers. The Dow Jones lost about 0.3%, whereas the S&P 500 gained slightly by 9 points, by about 0.3%, and Nasdaq climbed by 110 points, about 1% rise. Clearly, the mixed signal is coming from the continued discussion between the Democrats and Republicans regarding the boosting measures. And they're saying that they're a stalemate over a new stimulus package after Democrats proposed to send more than $900 billion to states and municipalities in one bill, and the GOP's counteroffer did not include any additional aid for the state and local governments. So continuously, there's a dispute happening between two parties. However, though, the House Speaker Nancy Pelosi said on Sunday that she would call the House back into session to address the funding for the U.S. Postal Service. All in all, we need some kind of decision-making happening quickly. Without that, there will be continuation of some mixed signals coming from the over U.S. However, though, because of continued COVID-19 incident, we think that the untaxed businesses will continue to flourish, and that is resulting into quite significant rise of the share price for the major tech sector and the major growth sector. And we think that that trend should continue for the future. That would have similar impact to other countries as well. If you look at the China, a lot of the stocks that seems to show strong movement, particularly relates to the IT sector. The Shenzhen index seems to be doing quite well relative to any other indices that we see in Asia. So overall, we think that the focus on the IT sector and the untaxed businesses and the growth sector should be the major focus till the end of this year at least.
Well, it was a three-day weekend in Korea, and we continue to see a large rise in the number of new coronavirus cases. And as we started the new week, the Kospi and especially the Kosdaq have plunged. What happened in the Korean markets?
Right. As I said, the doubts over the stimulus package of the U.S. seems to putting some concern for the Korean market. We need to see the global economy pick up. And if we don't have that, highly dependent, export-dependent Korea would suffer. Also, if you look at the COVID-19 incident, this is quite significant because Korea's GDP sustainability came from strong retail sales and domestic consumption numbers. But even though the Green Book reports that the Minister of Economics and Finance noted that the South Korea's domestic demand continues to take turn for the better, despite the uncertainty related to COVID-19 so far, if the continuous impact of the high new patient, it can be quite negative in the future. If that's the case, then the consumption pickup that we see might not last for long. So that is the major concern. And because of this, we saw a significant drop of Kospi by 2.5% today. Kosdaq is down by 4.2%. Of course, because of since the beginning of this year, Korea did well relative to other countries in terms of the equity market. Particularly the Kosdaq was up 99% from its bottom, and also YTD, excluding today, it was up almost 24%. So a correction was probably needed with this kind of negative news coming from the economic front. However, though, we need to see how strong these new pickup of the new patient for the COVID-19 will happen, and the implication of that related to the retail consumption.
Indeed. Well, this week we'll have new data on Korea's household debt in the second quarter. Other data coming out too, including coronavirus data. What will you be watching in the days ahead?
Right. The household debt number is very important for Korea. As I said, Korea's domestic numbers were strong because of the continued boosting by the local government, as well as the continued spending by consumers. But if you look at the consumer debt as percentage of GDP for Korea, the last quarter, the number was 95.5%, which is one of the highest number relative to any other countries in OECD countries. Of course, the other countries that showed higher number than Korea might be maybe UK and Australia, and Canada, but still Korea being close to 100%, that is very high number. So what that means is that the domestic consumption being strong cannot be lasting for a long period of time without government support. And we think that the government's continued fiscal support is a necessity. And if you look at the overall government debt to GDP ratios, it's only 36.6% of the GDP. So what we will be watching carefully is that how much consumer can spend relative to the household debt, and also how much government will spend in order to boost the economy using a very low debt ratios. So these are two major numbers that we need to watch carefully to see how we can sustain the economic growth of Korea relative to any other countries in the future.
Got it. All right, Mr. Yu, thanks so much for sharing your insights today. Always appreciate it.
Thank you very much.